Very good morning, friends. I hope you're all safe as well as healthy. Well, in the previous video, I started off my discussion with reference to the definition of accounting policy, which is given in India's 8. The focus in terms of definition was that there are certain specific accounting principles, there are rules, there are industry practices, which goes in the preparation and presentation of financial statements. Now, if you recall, I had put an emphasis that when you're looking at the word preparation and presentation of financial statements, well, in that particular case, we are looking in terms of, you can say, a recognition. We're looking in terms of the measurement, and we're looking in terms of the presentation in the financial statements of the company. So which means that we are looking at three aspects in terms of financial statements, that it is either a case of recognition choice, or it is a case of a measurement choice, or it is a case of a presentation choice in the financial statements of the company. Now, in this particular video, what I'm going to elaborate that what are the various choices, like what are the examples where a company gets a recognition choice or gets a measurement choice or it gets a presentation choice in the financial statements. Having said that, let me also clarify that when you say that there is a change in accounting policy, it does not mean that there will always be a choice with a company. Like for example, when you value the inventory at cost or NRV, whichever is less, that is also supposed to be an accounting policy. It does not give you a choice of measuring the inventory at cost or NRV. It's not a measurement choice, but it's a specific principle. But generally, let me put that emphasis, generally, when you're looking at accounting policy, it's a matter of choice in three areas: recognition, measurement, and the presentation. So let's, I think, take some examples in this video where we're going to understand a few examples on all these three areas. इंस्टीट्यूट ने रिसेंटली दिसंबर 21 के सजेस्टेड आंसर्स रिलीज किए हैं और मैं आपके साथ अनअकैडमी पर लेके आ रहा हूं इस सजेस्टेड आंसर सी फाइनल ग्रुप 1 में फाइनेंशियल रिपोर्टिंग का एक कंप्लीट डिस्कशन। ये क्लास आप लाइव अटेंड कर सकते हैं और इसके लिए आपको कोई फीस पे नहीं करनी है। आप डिस्क्रिप्शन बॉक्स के अंदर एक लिंक आपको दिया है क्लास का, आप उस लिंक को क्लिक कर सकते हैं, अनअकैडमी ऐप डाउनलोड कीजिए और आप इस लाइव सेशन को एब्सोल्युटली फ्री देख सकते हैं। इस क्लास के अंदर हम इस सजेस्टेड आंसर को सॉल्व करेंगे। मैं उम्मीद करता हूं कि आप ऑलरेडी एग्जामिनेशन की तैयारी कर रहे हैं और इस सजेस्टेड को सॉल्व करेंगे तो एक अलग कॉन्फिडेंस बनेगा। तो लाइव आपके साथ ये हम सेशन लेंगे और आपके साथ मैं इस पेपर को सॉल्व करने वाला हूँ। यदि आप अनअकैडमी प्लेटफॉर्म पर नए हैं तो आप इस सेशन को अनलॉक करने के लिए मेरा कोड इस्तेमाल कर सकते हैं CAKB10 एंड यू कैन वॉच दिस सेशन एब्सोल्युटली फ्री। तो आइए, मंडे को 11 अप्रैल 10:25 आपको मैं इस स्पेशल लाइव क्लास के अंदर मिलता हूं। लेट्स क्रैक इट। As I just said, that when you're looking at changes in accounting policies, generally when a company would get choices in terms of either a recognition choice or a measurement choice or a presentation choice in the financial statements, it would mean that there is a change in accounting policy. Let's first take an example of a change in the recognition policy. Indus 116, which deals with lease accounting, talks of that as far as a lessee is concerned, the lessee gets a choice. The lessee in terms of a short-term lease or lessee in terms of a low-valued asset lease can consider it to be an operating lease. Well, if you enter into a short-term lease, which is for a period less than a year, or if it is a low valued asset, I mean, it's not necessary that you treat it as an operating lease. You can treat it as a finance lease or an operating lease. Now, the moment you treat it as a finance lease, you're going to show the ROU asset, the right of use asset in the balance sheet with a corresponding lease liability. But if you're going to say treat it as an operating lease, then you're not going to recognize an asset or liability. So it's a matter of choice whether you recognize an asset or liability or you don't recognize an asset and liability. So this, let's say in a later year, the company decides that it was, taking care of the exemption, treating it as an operating lease. Now they want to switch over and do away with that exemption given in India's 116. It would be considered as a change in accounting policy, which is a change in the recognition policy, because the asset liability which was not taken earlier is going to be recognized now, or which was taken earlier is not going to be taken now, so it becomes a change. Let's take another example where we're going to see the change in the measurement base. I think one of the very basic example which comes in the mind is when you're applying Index 16 property plant equipment, or you're applying Index 38 in terms of intangible assets. The company gets a choice in terms of subsequently measuring the PPE or intangible assets at cost or considering it at a revaluation, which is a fair value basis. The value at which the asset will be carried in the balance sheet is going to be different. So that becomes a choice in terms of measuring at cost or measuring at a fair value. So that measurement choice would become a change in accounting policy. So if the company is going to switch over, let's say from a cost model to a revaluation model or vice versa, so in that particular case it becomes a change in accounting policy, which is a change in the measurement basis. Let's take the third area where there is a change in the presentation. The presentation would mean that you're looking at changes in the balance sheet presentation. Now, when you're looking at changes in the balance sheet presentation or maybe income statement presentation, an example what comes in the mind is Index 20 government grants. When a company receives a grant against an asset, it gets an asset related grant. Index 20 provides you a choice of either putting that money as a deferred income or taking it as a reduction to the carrying value of the asset. What we typically say that either you apply an income approach of taking it as a deferred income, the asset remains at a gross value, the deferred income appears on the liability side. Or you follow a deductive approach where the asset is reduced by the amount of government grant and the net value appears in the balance sheet. So either you present the asset at a gross figure with a separate government grant as a deferred income liability, or you present the asset at a net figure. So that is again supposed to be a choice. So if the company moves over from a gross to a net basis or a net to a gross basis, that also becomes a change in the presentation, and that change in the presentation is a change in accounting policy. Well, I have given you only sample examples with reference to these three areas, but there can be numerous other examples as well. So remember, when you get choices, generally when there are choices, I'm not saying that when there are choices it's a change in policy, but when you get choices in recognition area, measurement area, presentation area, it becomes a case of a change in accounting policy. That's all in this video. Wait for something more interesting coming on other aspects of Index 8 in the coming video. Thank you for watching. Bye bye and take care.